Hi friends, welcome back to our prediction videos after taking a break during the Karnataka election season. As you know, trading during these major events can get very tricky, so as a professional, we stay out during these turbulent and uncertain times and play safe. Okay, so that uncertain period has thrown up few trading opportunities for us. Today we look at Reliance Infra and SAIL or Steel Authority of India. First on Reliance Infra. Reliance Infra has given us a tricky but interesting trade setup. As you could see here, the stock was in a downtrend and it went into a long consolidation here. The stock was in a downtrend and it went into a long consolidation phase here. However, last week it broke through the lower range of it. This was the lower range. It broke through the lower range of it and has made a retracement back into the breakdown zone. This was our lower range of this consolidation pattern. Last week it broke through this zone and has given us a decent retracement into its breakdown zone. This is where our trading opportunity lies. In an ideal scenario, we would expect a move to the downside of the approximately same magnitude as the previous move. What does that mean? In an ideal scenario, this is our primary move. So in an ideal scenario, what we expect is prices to push down of the same magnitude as the previous move, approximately. So we are expecting the prices to drop approximately into this level. That's a long way to go. Now let's look at this setup. For that, I want you to focus on this portion here. Just focus on this portion here. Let's drop down to a 1 hour chart. When we drop down to a 1 hour chart, we have this lower low closing from a level of support, push back into that level of support, and we have a retracement, or we have a lower low closing once again from that level of resistance. So this is our setup. We are in a downtrend. Since we are in a downtrend, we are looking for shorting opportunities, and this is one such shorting opportunity for us. Now let's switch back into a 4 hour chart. And assuming this area here to be a pause area, or this area to be an area where the prices stalled before making its next move to the downside, let's see if we can have any references. Okay, first for ABCD. This is our possible AB leg. And this is our possible decompletion point. Let's draw a line at our decompletion point. Next, let's see if we can have any fib confluences. From this point to this point, back into this point, and from this point to this point, back into this point. So that gives us a confluence at 1.2, 1.414 and 1.272. Let's draw a line there. That's it. So we have a confluence at this point, and we have our decompletion point here. So let's draw a tiny zone here. So this is the tiny zone here where the price might fall into. However, the tricky part in the scenario is the diverging RSI. On both these lower lows, the RSI is divergent. This is the RSI level corresponding to this point, and this is the RSI level corresponding to this point. As you could clearly see here, while these lower lows were made, here on the RSI, lower highs were made. So that is a clear RSI divergence, which suggests the sellers are losing momentum. So we have a setup that tells us to sell, whereas when we look at the RSI, it's diverging, which confuses us on our short trade. So what could we do here? That is the $1,000,000 question. We can trade on the short side as well as on the long side. For shorters, place your orders at the opening in the next trading session and pick your profits within this zone, or when it comes into this level of immediate support. You can have a scenario where the prices pushes into this zone, might push a little higher and drops into this level of support. Okay, so for shorters, say you take the trade somewhere here in the next trading session, this would be your, within the zone could be your first target, followed by this as your second target, and the stop loss has to be placed just above this resistance level in both cases. This is for shorters. As for buyers, wait for the price to drop either into this zone or the strong resistance level just below it, with RSI still diverging. That is the critical point. When the prices drop into this zone or into this level of strong support, the RSI has to be still diverging, which means when prices drops into this level, the RSI has to stay above or at this level. Okay. Once that happens, we can look for a buy when you get a convincing higher high from either this zone or from this level of support around this point. For buyers, once again, let me make it clear to you. For buyers, wait for the prices to push down into this zone or into this level of support with RSI still diverging. And once you have that kind of a setup, look for a higher high closing, a convincing higher high closing from this zone or from this level of support. In such a scenario, our targets would be assuming we take a trade, we get a higher high closing from this point. In such a scenario, our first target would be this, with a stop loss just below the most recent low, and our second target would be this, with a stop loss placed at a similar position. This is in the case for buyers. Okay. So let's see how this trade is going to play out in the next few trading sessions. Next is a short on SAIL, or Steel Authority of India. SAIL was in a downtrend, making lower lows and lower highs. However, this candle here violated the downtrend. So this downtrend is no more valid. Probably SAIL is entering into a period of consolidation, after which it might make a directional move. So let's see if we can spot any opportunities within this consolidation. We have a convincing breakdown here, a retracement back into a level of resistance, and a big bearish candle pushing prices down from that resistance, which gives us a trend continuation setup. A breakdown, retracement, and this big bearish candle pushing the prices down gives us a valid trend continuation setup to the downside. Next, let's see if we can have any references to support our trade. First, for ABCD, this is our AB leg, and this is our possible decompletion point right here. So let's draw a line at our decompletion point. Next, fib confluence. Let's see if we have any fib confluence from this point into this point, back into this point. And from this point into this point and back into this point. Now that gives us a confluence at the 1.272 and 1.414. Okay, so let's take these off. Now this is our decompletion point, and this is our confluence point, and in between both these points we have our strong level of support. So let's draw a zone where we are expecting the prices to drop into, and take these off. So we are expecting prices to drop into this zone before it pushes back higher. Okay, so we have our setup and we have references to support our trade. Next is to see where to place our trades and where to take our targets and place our stop loss. This is our setup. This is our breakdown. This is our retracement, and this is where our setup got completed. We are expecting the prices to push down into our immediate level of support. Okay, so let's now pick our target placement tool, and assuming you place the trades at the opening in the next trading session, our targets would be this, with a stop loss just above the most recent high. Okay, in this trade there is something else which supports our assumption to go short on the trade. If you take a fib retracement from this point into this point, you could see that whenever prices has pushed higher into the 0.618 level, the prices got rejected and it pushed lower. Okay, so that is an additional attribute which supports our trade to go short. Okay, so let's now see how this trade plays out in the next few trading sessions.